Hello, today is the 28th of February 2012. It's not often that I do a Dow Jones video, so I'm going to do one. It's more of a video response from silverfuturist's video. He's talking about now that the Dow is over 13,000 at levels not seen since May of 2008. No, I'm not really concerned for the same reasons, because to me this is a different 13,000 than in May, but it still looks as if things are going to get scary because they have been scary in the past. Well, today, the last few 7-8 weeks or so, since Christmas maybe, we've seen this real lack of volatility where it's tiny on here. If you look at this on the hourly chart, well, the pattern is telling us that this thing is ready to burst higher, but given its low volatility, bursting higher might be 200, maybe 300 points, as that would be extreme. That would take us all the way up to, well, here, if we go up 300 points. Actually, that's 200 points. Still, that looks pretty extreme given the fact that the size of this range is pretty small. And a lot of times on bull markets, we see slow but sure increases within the markets. Now, you've seen some big moves in here, and we had some massive moves within this point in here. But this massive move, the reason why it occurred, at least the news that people like to follow, well, they were telling us that the U.S. had debt problems, and that it was actually going to be a problem. Well, per se, nominally it would be a problem, we'll say. Because what occurred was it came down to this line and it didn't hold below it. It went below it but didn't stay below it. And that's from this low and this high, so that told us that this rally succeeded. It didn't fail. No, this failed. The failure was the summer sell-off, because at some point in here would have been a 61.8% Fibonacci level that it got by, and well, it's been rallying ever since, and it comes back to its previous level. Well, maybe it just wants to break through again. When we look at these bands, this band is just, it's going up pretty high, but that's because A, that's in a bull market, so these things go up in bull markets, and volatility is low, so it'll even go further with low volatility. This band goes up in bull markets, but it's not going up because it goes down with low volatility. So the low volatility has made this thing just go straight, and this one scream higher. We're now going to switch this to the monthly chart, with each candle representing approximately 30 days in data. And this is what we're looking at. So we're at this previous level. We've seen that on the daily or weekly chart, where obviously this was a failed move, just even from this breakout point. From this breakout point, it would have to go all the way down here for this to fail. This rally has got a long ways to go yet to fail. It pretty much has to go below this line for sure, because when you calculate Fibonacci from here to here, well, the lower line is here, but if you calculate from here, you'd be looking at somewhere around here, 8,000. It needs to go below 8,000 to confirm that this rally fails. But that works with down moves as well. We needed to confirm and hold above this line here for this selling to be a failed move, and that's happened. That has happened. So finding support at this level, after it found resistance, well, that tells us right then and there that, well, that's standard, by the book, and, well, why wouldn't this go back to the 14,000? After all, it's already been confirmed that that's going to be the case. When something is confirmed and it doesn't happen, well, my best guess, and it's, I think, a pretty accurate one, is that the failed move on the opposite direction is probably going to be pretty harsh, because it seems to me the bigger the failure, the bigger the fast move in the opposite direction. We haven't had a fast move from this failure yet, because quite frankly, even though it's confirmed that it's going to fail, it hasn't failed, because it really needs to clear above this to say that it's history, basically. Because as I've stated, you go below here, well, oh, wait a second, I'll be saying this was a major failed breakout. And you don't know exactly at which point it's going to do what it needs to do, when it's going to rise, that type of stuff as well. And if you say, well, there's people in the back, and they're going to do all this selling whenever they want to, and that's just the way it is. Yeah, well, for the most part, yeah, you're right. And that's why, if you do see this whatever failed move, then they don't care what the mathematics state, that if because we've been here and done this for this, and that the market has to go higher. I don't think they're going to follow that precisely too much. And that's why you never know for sure. And I'm just rambling on and on and on. But this is an interesting pattern because this reminds me of what I'm seeing within silver. Now, it's not doing it at the 61.8, but it's doing it at this level here, same sort of thing. When you confirm you're going to break above here, then you expect it to go to here. And that's what we're seeing with silver. And let me just bring this chart up for a quick little second. And that is, we've broken above here, and it significantly went above this line. Now the question is, are you going to go long here to hit your target level here, knowing that it could very easily go back here? There's a lot of risk for very little reward. But when we go back to the Dow monthly chart, we can see the same sort of pattern, where after establishing the resistance field and breaking out, it did it in a sort of different way, but nonetheless, when it broke through, it had a significantly nice gain, and then came back pretty much precisely to its last previous line. And even if you put a stop barely below this line, oh, isn't that just beautiful to get stopped at right here? And you know what? Some people did. That's the way the nature of the beast plays. And yes, so that's today's video on the stock market. And another final point is, back in 2008 and here, there's a big difference within the two charts, because within here, what had happened, it was in a bull market, few years recovered from the last lows, and making new highs from the 2000 highs, and a breakdown below this line, stabilizing, and then finding resistance as this band was turning over. So that's a much, much different look compared to today at 13,000, after it's had two corrections within this level, and it's now just breaking past this band. This obviously doesn't tell me anything bearish whatsoever. If anything, it shows me the complete opposite on a nominal level, which would be that of bullish. Now, the reason why I know for sure these were small corrections, other than just the simple fact of seeing it, is because the bands never did really decrease, but I need to see at least one candle where the high is lower than the moving average of lows, like in here and here. And just in the bull markets, the lowest point is above the 18 moving average of highs. So if it doesn't do that, then it's nothing more than a correction. And thank you for tuning in, and have yourself a great day. Bye-bye.